From Powell's September meeting to Washington's spending bill and Trump's tariff Supreme Court ruling in October, the next 45 days will define the market. Welcome back to the Rob Report, where money meets news. This one is going to be quick but packed. Let's get into it. Circle these dates: September 16th and 17th. That's when Jerome Powell, the man, the myth, the legend, and the Fed meet in Washington for the FOMC. This is basically where the big table sits and they decide interest rates and lay out their game plan for the economy. Now, this isn't just any meeting. This one comes with their updated forecast, the famous dog plot, and Powell's press conference right after. The markets will be glued to every word. So here's the setup. Jobs are slowing, unemployment's creeping up, and manufacturing is still hot. Traders want to know, will Powell finally open the doors to the rate cuts? Or will he stall? Powell recently said that the stability of the labor markets allows us to proceed carefully, but the risks may warrant adjusting policy. If Powell hints at cuts, expect stocks, especially the Nasdaq, to jump. If he pushes back, the markets won't like that. Next up, Washington. By September 30th, Congress has to pass a spending bill to keep the government open. Most likely, it'll be a short-term patch, what they call a continuing resolution. Why does it matter? If they miss the deadline, we get shut down. That means furloughed workers, frozen service, and delayed economic reports. Much like this. And the market hates being blind. Traders need those numbers to price risk. The numbers here are big. We're talking about $1.6 trillion in spending, with the deficit already near $1.9 trillion this year, and projected to stay high onto 2026. The last time the government shut down, late 2018 into 2019, and it dragged on for 35 days, the longest in history. The Federal Reserve workers went without pay, businesses' confidence dipped, and while the S&Ps didn't collapse, volatility spiked and Washington looked broken. Treasury Secretary Janet Yellen puts it bluntly. Repeated fiscal brinkmanship erodes confidence and weakness in America's standing. If lawmakers pass the bill early, markets breathe easier. If they drag out, buckle up for turbulence. Then comes October. On October 14th, the stay on Trump's tariffs run out unless the Supreme Court steps in. Here's what happened. A federal court ruled that most of Trump's tariffs were illegal, basically saying tariffs are taxes and only Congress can levy taxes. But they left them in place until October while the appeal moves forward. Markets reacted fast when the ruling hit. Stocks dips, bonds sold off because if tariffs are overturned, the U.S. might have to refund hundreds of billions collected since 2018, and that would blow a hole in the government's balance sheet. For context, tariffs have been pulling in serious cash. This year alone, we're looking at tens of billions of dollars per month, some projected to stay over $300 billion by year's end. That's why this case matters so much. If the courts keep the tariffs in place, the Treasury keeps collecting, inflation stays sticky, and importers keep taking the hit. If the court kills the tariffs, businesses may cheer over lower costs, but the bond market won't like that, and Washington may face huge refund liabilities. Trump's reaction? He blasted the ruling, saying losing tariffs would completely destroy America and vowed to take the fight all the way to the Supreme Court. So here's the roadmap. September 16th and 17th, Powell and the Fed meet in D.C. The market wants a signal on cuts. September 30th, Congress faces a hard deadline to pass a spending bill or risk another shutdown. October 14th, Trump's tariff hit the Supreme Court, and the ruling could reshape trade, bond, and stock markets overnight. 3 events, 3 deadlines, back to back to back, each one with the power to swing the markets. And here's the truth. Volatility isn't something to fear, it's something to prepare for. Traders who adapt stay flexible, and those are the ones who come out not just on top, but ahead. As Powell puts it, restoring the price stability is essentially achieving both sides of our mandate, and we'll keep it at it until the job is done. You've been watching The Rob Report, where money meets news. Make sure you like, drop your thoughts in the comment section, and subscribe to stay up to date with the headlines that shape not only the markets, but your wallets. Again, thank you all for watching, and I'll see you in the next video.